All right, we're answering your questions now. Bryn, the first one to you from Dion in California. Your outlook on energy stocks like Diamondback and Energy Transfer. What do you think?
Yeah, well, I own the energy space. I like the energy space. I think on those two names specifically, Diamondback was at $25 in November. It's close to, $78 now. It's had a monster run. I think that easy trade in Diamondback is probably long in the tooth. I like Energy Transfer as well as a diversified basket at this point.
Okay, Pharma Jim, to you from Stephen Woodbridge, Canada. Thank you for the question. Does Jim like Disney for the long term? Do you?
I do very much. Very positive article in Barron's over the weekend, by the way, but this is a great double threat. You've got the streaming business that continues to grow at a gangbusters rate, and I think Disney is soft selling us on when that turns profitable. They say 2024. I wouldn't be surprised if it was early 2023. And then the theme parks are reopening. That's the double threat. Earnings are set to really get quite juicy. Maybe not this year, but next year. You should be in this for the long term.
All right, Steve Weiss to you from Dillip in California. I've been riding Cleveland Cliffs from $13 in February. Should I hold or take the amazing gain and run? It is down month to date. It still is up about 20% year to date, and it has been a Farmer Jim name. As you know, Steve Weiss, your unofficial financial advisor. What do you do here?
I'm staying with it. As a matter of fact, I added to the iron ore trade on last week, Friday as well, with Vale, which gives you a bigger yield and a better just embedded return because of the buyback. The company told us what the numbers are going to be for the first quarter. They report this week, Thursday, I believe, and they beat guidance. B&B downgraded it today, but they downgraded it after upgrading it January 19th, which was at a higher price. And when does the stock look better? It looks better today, having greater clarity on the economy. So I think this continues to go. Jim's price target's 25, which means I'll sell 24 and a half. I'm staying with it. You should too.
I was going to say, I was waiting for you to give Jim props on this, but I must have missed it. All right. Joe, to you, emerging markets from Vince in Florida. Says, I purchased an emerging market fund back in November, had a nice run upward until February. It's since pulled back. I've not heard any mentions of EM on your show lately. So what do you think of the future of EMs? Good question. What's the answer?
Great question. So let's make some mentions of it. Let's answer the question two ways. From a long-term portfolio construction capacity, you need to think about the emerging markets in a rebalancing mannerism and also embracing technology in their economy. So I love it from that perspective. In the short-term nature of owning something like the IEMG, which I own, it's a way to play a recovery potentially in a name like Alibaba, which is 5% of that individual emerging market ETF.